So here's my theory on what I think is going to happen over the next year. Now, I don't know if there's some sort of conspiracy behind all this stuff. That's not what I'm saying. But I think Peter Schiff, if you guys know who he is or not. Now, full disclosure, I do use him as a broker for my gold fund. I like his gold fund with Adrian Day, so I'll put a portion of my portfolio with him. They manage that part, and then I play in my own world with stocks in my own account. But I do use them for some of it. It gives me some sort of access and communication there. But I think he's going to be wrong initially. So here's my idea. Right now, the government cannot afford to keep refinancing its debt at these high interest rates. See, most people don't understand what is happening right now. All of these U.S. Treasuries, all of these new bonds that are, let's say, 4%, 5%, the government has to pay that interest back. Now, the government has refinanced their debt because most of it's short term now. So they've refinanced this debt at a huge amount. They can't afford the interest on the debt if this continues. That's why I think the Fed is going to have to drop interest rates, just not yet. Now, again, I don't know that this is nefarious or something where they're, trying to destroy the banking system, but I think it's going to play out like this. They're going to allow a bunch of these banks to have issues and begin to fail, right? They need a reason to come into the market. The government can't come out and say, oh, well, this interest is turning out to be a lot for us. So do you mind kicking us down some money, Fed? Right? The Fed doesn't print money and just give it to the government. The government has to issue bonds into the market. A dealer, they're called primary dealers, they come in, they buy these treasuries and they can sell them to the Fed. So that can happen too. But I think what's going to happen is you're going to have this massive panic in the stock market. It's going to be crazy. And there is only two tier one assets that big hedge funds, that all of your pension plans are in. Legally, they can only buy gold or U.S. Treasuries. So they are going to flood into the U.S. Treasury market just when the government is looking to sell a bunch of treasuries. So they're going to be selling these things into the market. All these buyers are going to come in at these, high rates that they're at now. And yes, the government can't afford that in the longer run. But here's what I think is going to happen. All these people come in, they start buying all these treasuries at pretty good deals. It's going to start to push, the interest rate down, maybe a little bit, but that doesn't even matter yet, right? Because let's say they get these at 5%, 4%, everybody starts to panic. They're really rolling into these. Eventually, I think it's going to turn because they're going to come in to save the market, right? The stock market at that point. All these companies, the media is going to be pushing, oh no, what are we going to do? All these people are losing their jobs. The recession's here. What do we do? The Fed's going to come in. They're going to buy those treasuries from you. They're going to buy them from all these companies, all these pension funds that are running your 401ks, or your 401ks and the pension funds. They're going to come buy these from you, and you would be stupid not to sell a treasury at 5% interest, because as rates go down, right, the Fed's going to force the rates down, which is going to force the value of your treasuries through the roof. And you'd be crazy not to take that profit. So the banks are going to take that profit. Pension funds are going to take that profit. They're going to take the profit and they're going to come buy stocks at distressed prices. The Fed is then taking all of that high interest rate U.S. Treasury debt, right? They're putting it on their balance sheet. So they're going to take the loss. They can make it disappear if they want, right? The government can default with the Federal Reserve if they want and say, oh, well, we can't make that payment, right? Or can you just print the money? The Fed is the one who prints the money for the United States government. The United States government doesn't actually print their money. The Fed prints the money for our government. It's a private company, if you didn't know that. But I think that's how it plays out. There will be some places that make incredible profits on these treasuries because The Fed doesn't have a real balance sheet like you do and like your company has to. They don't have a real income statement. The Federal Reserve Bank cannot lose money, currency, whatever you want to call it, value. They can't. They own the printing press. Your government does not own the printing press. Picture it like this. Your government says, hey, can you print us some money? And the Fed says, yeah, we could go ahead and do that. So then the Treasury at the U.S. says, okay, here's X amount of money, and the Fed has to give that to them. That's why the dollar bills say Federal Reserve note. It is a debt instrument. You owe that back to the people who made that. That's how the Federal Reserve operates. So they create all this money. So this is inflation. When the Federal Reserve buys all these treasuries from the whole world, because China's not buying, barely. Russia's not buying anymore. So who's going to lend the government money? You're going to have to, and you're going to do it through a panic, through a crisis, because that's all these pension funds can buy. They're not going to run to gold most likely. Now, I think Peter Schiff will be right in the long run. And I don't know, that long run might be coming very, very quick, because when the Fed buys all these treasuries, that is direct inflation into the economy, because now your pension companies, your 401ks, maybe you want to borrow against it, right? Or just hedge funds that made these big profits, or banks that made these big profits off these treasuries. Now we have to find out, where does that inflation end up? Does it end up back in the asset market where you have, another big bubble go ripping up over the next 10 years? Does it get in the hands of more individuals where you see that inflation in your basic prices? And that's kind of where Peter Schiff goes with this. And I think that will happen again to some level. But I think it's possible you end up in a hyperinflation. Now, I don't know to what level that is. It may not be Zimbabwe hyperinflation, but what if, a hyperinflation to me, if you lost 100%, or let's say 20% a year in inflation, that's not the actual definition of a hyperinflation, but in 5 years or less that the value of your money was basically gone, I'm pretty sure everybody would consider that pretty dang quick to lose their purchasing power. So I think that's how this plays out. The Fed comes to the rescue, buying all these treasuries that end up as really high values because the interest rate is high relative to the recent history, at least. And there's going to be people who make a lot of money. So I'm set up through the gold fund as a backup plan. I like the leverage that mining stocks give, but I also have physical gold. I also use Sprott's trust fund for physical gold-backed paper, is the way I look at it. It's like think of it like a stock that's backed by physical gold. So I think that's a good play too. But I also own TLT. I want to hold treasuries because they got beat so bad. I think there is a huge profit coming in, almost like Harry Dent. Like Harry Dent's been playing, that side of the cards. He's been wrong for a little while, but I think he's going to end up being right in the very short run. It's going to happen really fast. And that's why I'm positioned that way. I still have my short position on New York Community Bank, so I'm going to hold that. I got to hold that all the way out through December, so I might as well. But I think ultimately that's going to be the play. Not that you can't own other stocks. We own some stocks in China. We might have to sell those because I'm getting worried the government is going to, not allow us to buy Chinese stocks or something. And I don't want to get caught up in that. Although I think that whole area is going to be better in the long run because you don't have the United States currency. So it's kind of a double play, right? As the US dollar, I think, falls in value relative to the other currencies, you make money there even if the stock doesn't move. Then the stock moves on top of that and it's priced in that currency. You make an additional, like say the dollar dropped 10% against that currency and the stock went up 10%. I mean, you're effectively a 20% gain, even though the stock only moved 10%, right? So that's one of the strategies. But ultimately, I think that's what's going to happen. You're going to be forced into buying treasuries because it's going to be a good deal. And then when the Fed comes in and says, yeah, I'll buy everything from you, and it doubles the value of your bond, you're going to sell it. why would you hold it? Who cares if you're making 5%? Why would you hold it when you can make 100% on the just the value of that treasury? Of course you're going to sell it. So I think the banks will do the same thing. I would continue. If I were you, I would be using your money to buy those types of things. TLT is probably the most well known, but then as rates get pushed way down, when they come in to buy all these up, all these old treasuries, these older bonds, they're going to be revalued back to about where they were. Like say something, a treasury that was at 2% a couple of years ago is now going to be basically full value again, because interest rates will get pushed down so much. So the government is going to finally be able to start selling these treasuries again at these super low interest rates, and they're refinancing that debt. Just like you would refinance your house today, it's almost at like a 7%, right? So if you just bought a house, you're crying for interest rates to come down to 2%, right? If you could refinance your house at 2% right now, you totally would do that. Your payment would collapse. That's effectively what the government's going to end up trying to do again. Now, we don't know how far they have to go to make this work. How much inflation do they have to bring into the system to make this work? I think this is all coming to a head. It's perfect timing. You got the debt ceiling that has to be raised. You know they're going to raise the debt ceiling. The government never does not raise the debt ceiling. Of course they're going to. Republicans, Democrats, it doesn't matter. They're going to raise the debt ceiling. So this is going to get really interesting. I hope that was helpful. That's kind of my thesis on how I think it's going to play out.